The crypto market is constantly evolving at a rate we haven't seen since the dot-com era. This is giving the average investor more ways to generate passive income off their current crypto holdings. Now, in recent years, crypto mining or proof of work has been the main focus for passive income. Now, huge investment funds have set up mining compounds in hopes of acquiring more Bitcoin. But even more recently, we've seen the rise and partial stumble of a new form called proof of stake. Within this new type of validating transactions, we've opened the door to staking and yield farming opportunities. Today, we're going to look at both of these options as well as their risk and rewards in order to uncover the perfect strategy for your investment. Now, if this video interests you, make sure to hit that like button, subscribe to the channel if you haven't already. I'm giving away over $2,700. There is a link down below for that Gleam giveaway, so make sure to go and check that out. But without further ado, let's dive straight into the video. All right, so let's start off this video by defining both of them first so we have a good understanding of what they both mean. So what is staking? Well, staking originated as a service to support the blockchain by providing as what we know proof of stake. Now, this is where investors stake or lend their crypto assets in exchange for nodes, which would then be used to confirm transactions that occur on that network. When used, these nodes would then be rewarded for providing that service. This works as a partial fee reward share. Now, this has been incredibly oversimplified over the years, where exchanges are now offering individuals the ability to just stake their crypto assets on the exchange without having to perform the node conversion. They can lock up or sign for a preset annual percentage yield. Now, the goal of staking is to increase the safety of the network as a whole, which is one of the key selling features of DeFi. Now, a huge example between the difference here would be a pre-search node where you have to go and set this up yourself on your own server, compared to a strong block node, as we've seen, which was sold as node as a service. So just by clicking one button, you are able to start that up. Next, let's dive into yield farming. So yield farming is technically even more simple compared to staking. The goal is to add liquidity to an exchange, which will then be used for the main purpose of lending and trading. Again, this is in exchange for a agreed upon APY for these lent assets. The APY is actually paid out through the exchange's fees charged on individual transactions and trades. All right, so now that we can understand what each of them means, let's talk about the pros and cons of each of them. So in regards to staking, of course, a huge pro is the ability to earn a stable or reasonable interest on your token that could be sustainable even during a bear market. Now, the con is most of the time you're required to lock these staked assets for a designated period of time, which can lead to risk from volatility. Now, of course, we've seen a huge crash, and so you want to be able to potentially pull your money out if you saw this coming, but of course, if it is locked, you wouldn't be able to do so. Now, in terms of farming, you will typically get higher APYs. If the project is able to maintain their position, it could be substantial. Now, the con to farming is that any project or exchange can offer farming or lending to numerous rug pulls and substantial losses. Now, the risk is typically masked by this high APY, so make sure you do your due diligence and your research before diving into any of these. Now, depending on when you are viewing this video, everything could have changed in terms of the actual APY you would earn, whether it be with staking or yield farming. So today, I'm just going to go over some of the top sites or the best options I believe you should do some research and look into if you're interested in either of these. I'd like to take a brief second to introduce the sponsor of today's video, MargeX, your reliable way to trade Bitcoin and many other pairs with up to 100x leverage with as little as $10. No personal details required and an incredibly simple sign-up process. By combining 12 plus liquidity providers, MargeX has implemented a price manipulation protection system with AI technology to help keep unfair liquidations away. Simply click Start Trading to begin. You're then able to deposit and withdraw at a click of a button using the provider you choose. Input code TORIN15 for a bonus when you deposit $300. Once clicking Trade, the user interface is extremely easy to navigate and explore. You're able to choose between limit, market, or stop market orders. Input your order size leveraged or use the sliders below for up to 100x. You can then either buy long the pair or sell and short it. All open positions will be down below for you to monitor and close. Check out margex.com. So again, depending on when you are viewing this, I would definitely support doing a couple research Google searches as to some of the best crypto staking platforms currently that month you are in, because of course it does change over the last couple years, even months. We've seen some huge exchanges go under, go bankrupt. So of course things are changing all the time. Please go out and look into these platforms before you just dive in and throw some money into them. As I am filming this, some of the main platforms I personally use are Binance and Kraken, but we can see Uphold here as well as Bitstamp and my Cointainer. Now both Coinbase and Crypto.com are on the list as well, but we have seen some FUD surrounding their insolvency. Again, I'm not saying that this is or isn't the way to go, but here are a few options you can take a look at. Now some of the better yield farming platforms I've also seen in my experience, as we can see here, would be Accrue for 2022 here. DeFi Swap is always a very popular one. uHodler has been an interest of some of my Discord members, as well as eToro. BlockFi and Crypto.com are also on the list, but you will have to go do some research as to what APYs they are currently offering. So we've now seen some of the options that are available to you to potentially go and research with your investments. But I do want to touch on the main point, that is the market is completely volatile, and of course there is extreme risk involved in both of these options. Make sure you never invest more than you can afford to lose, and always have conviction in what you are doing, never just following blindly along with someone else's opinion. Takeaway points I truly want to stress here is focus on defining your own set time limit and risk tolerance here. Decide what amount you can afford to experiment with and potentially lose. And of course, research the sites above to find one that works for you. I hope you guys enjoyed this video. I hope it educated you slightly. If it did, make sure to hit that like button, subscribe to the channel. And until next time, take care.